The stock market has been in pullback mode this week, even as economic data continues to improve at a record-setting pace. So why the apparent disconnect? We try to connect the dots in today's fastest 4 minutes in finance. Hello again, I'm Scott Inman. Well, almost all of the corporations that make up the S&P 500 have reported first quarter earnings, and it has been a record-setting season. As of Monday, nearly 90% of S&P 500 companies have reported those first quarter earnings, and those earnings are up a whopping 49% year over year. That blew the socks off the estimates. The consensus estimate for the first quarter of 2021 was 24%. That means things were almost twice as good as the experts thought they would be. Investors have benefited already. Both the S&P 500 and the Dow closed at all-time highs last Friday. The S&P has made 26 new highs already this year. But this week, things have gone in the other direction. Here's even more data. The revenue from S&P 500 companies is expected to be up 10% year over year for the quarter. That's 4 percentage points above the March 31st estimate, and the most upside ever recorded. LPL Research tells us companies have done a tremendous job of managing their costs during the pandemic, and that has led to huge profit margins. Economic growth is in full swing as the reopening from the pandemic happens faster than analysts anticipated. Commodity prices have surged. We talked about the price of lumber a few weeks ago. Materials companies are raking in big profits. All these are contributors to companies beating expectations for earnings. And if earnings drive stock prices, and we believe they do, it could be a little disappointing to see the market drop this week. But should we be worried? For the answer, it's important to remember that even though stock values are greatly tied to earnings, the stock market is a forward-looking vehicle. Today's earnings news has likely already been baked in to some degree. Plus, these earnings reports have been trickling in for the past month. The trend had long ago been spotted. So we may have already gotten the kick we should get from record earnings growth. That leaves us with the question, where do we go from here? Well, there's very little headwind to the economy right now. Inflation is still a concern. Again, see those lumber prices. But LPL Research believes these type of price surges are temporary, and they do not expect runaway inflation anytime soon. The latest manufacturing data does show we may have peaked, but it's not uncommon for a quick surge in manufacturing to follow a recession. And this recovery has been one of the fastest ever, so a peak should sort of be expected. And it's important to note, just because manufacturing peaks does not mean we don't keep growing. We just grow at a slower pace. And that's the big takeaway here. When the economy comes back this fast, it's hard to keep up those growth rates. That doesn't mean we don't grow, but we may have to get used to a slower pace. LPL Research recently raised their fair market value target for the S&P 500. Simply put, it's where they predict the index to close at the end of 2021. They raised it to 4450. If they're right, that would be about 7% higher than the closing value on Tuesday. And that would be a solid return, but nothing close to the past 12 months in which the S&P 500 is up around 40%. We've been talking about this with our clients during annual reviews recently. It's great to see those huge returns, but we know it won't be like that every year. And the market doesn't always go up. Setting those expectations for the remainder of 2021 seems like a good idea. Thanks for watching. Want more content like this delivered to your inbox weekly? Visit fastest4.com to learn more.